Terrific. Hi, welcome, Janek. Our next bank to present is PB Bankshares. PBBK is the ticker. It's Coatesville-based, Pennsylvania-based thrift that has just passed its 1-year anniversary since it converted. We're very happy to welcome their CEO, Janek Amin, to talk with us about his vision and the bank. And we'll turn it over to you. Thanks. Oh, we have to unmute.
Oh, Janek, you have your mute is on.
There we go.
All right, is that better? All right.
Yes, perfect. Thank you.
Julianne and Ian, thank you for allowing me to talk about Presence Bank, our story here. And for those of you on this call, I thank you for your time. And any of you who are investors, I thank you for your capital. To give a little background on my career, I graduated from university in England, and I worked in the city of London for 2 years in a management training program for a bank. And I moved to the US. And when I moved to the US, I worked for Fulton Financial Corporation. I was there for 7 years, and at Fulton, I worked in the finance department. And then when I left, I was heading up their loan review and loan workout department. Then I went to a bank in Harrisburg, Harris Savings Bank. It was a thrift converted. I was there for 7 years, at which point it was acquired by Sovereign Bank. And then 3 of us, we decided to leave Sovereign, and I was one of the 3 original founders of Greystone Bank. We had grown that bank organically and through acquisition to roughly $3 billion in assets. After 7 years, it was sold to Susquehanna Bank. At Susquehanna Bank, there were 3 regions. I headed up their largest region. It was roughly $9 billion in deposits, $8 billion loans, 120 branches, and I also oversaw their commercial real estate group and the cash management group. From there, I transitioned down to Florida at Sunshine Bank. Sunshine Bank was a bank which had demutualized, grew to roughly $1 billion as assets, and was sold to Center State Bank. After that, a customer of mine called me from Harrisburg, family-owned wealth management company. They asked me to join them as their CEO and buy an equity stake in the company. Wonderful company. They manage roughly $1 billion in assets, so I joined them as their CEO. Half the assets were 401k plans for companies, and half were people who at least had $1 million to invest. It was a great experience for me, but after 6-9 months, I was totally bored. I was working 2 hours a day, and I got the family, and I said, look, this doesn't really make sense. In month 14, when I was there, I met with Joe Carroll, who was chairman of Coatesville Savings Bank, then Coatesville Savings Bank. Met with the board, talked to him for 5 weeks, and I turned the position down. And it was 10 days later, my wife said to me, are you making a difference? And what you'll find about me is purpose is really big for me. And I said to her, I'm not making a difference. And she goes, why don't you consider a Coatesville position? She was born in India, raised in Harrisburg. So I said, we'll have to move. She goes, that's fine. And I told her it was a 60% cut in my compensation. She goes, don't worry about it. So that's when I moved to Coatesville. And one thing is purpose is really important to me as to why people do the things they do. And the more you can align people's personal purpose to a company's purpose, 1 + 1 is going to equal 3, right? So if you think about someone who wants to save dolphins, when they come to work at a bank 8 o'clock in the morning, they're going to be miserable. When they leave at 5 o'clock, they're going to be very happy. So the question is, how do you align their strengths to what they do every day? And I'm really very focused on that, because if I can align their strengths to what the customer experience needs to be, right, 1 + 1 is going to equal 3. So we spend quite a bit of time on this. There's a lady, when I was in YPO, Cynthia Montgomery, she was a professor at Howard University. She wrote a book called The Strategist, and it's all about purpose. And she's basically written about this, that companies that have purpose, their financial returns are much higher than companies that don't have purpose. So the first thing I did when I came to this company over the first 3 months is we focused on our purpose, we focused on our values as well. If you look at passion, we act like owners. It was a mutual, right? There was no stock. But how do you act like an owner in a mutual? And we, instituted this program. We developed this leadership book. It's actually 14 pages. I haven't shared the 14 pages. This was all homegrown. We did not use a marketing company, nobody. This is all homegrown because I want the employees in the bank to feel their part of this and they're involved in this. So slides 4 to 6 goes through our foundations, goes through our purpose, and the next slide actually goes to our principles: high care, high performance, high accountability. If you look at high care is really important to me. I want to make sure people who come to work, they're taken care of, because I'm really interested in the customer experience. So to give you an example, we had 5 branches. We now currently have 4. We have 2 in Chester County, 2 in Lancaster County. And in our branch system, not sure, in our branch system, 98% of the employees are ladies and 50% are single moms. Not sure why. It's just the way it is. So when I went to our Lancaster branches, the ladies didn't have a doctor of their choice, nor did their children. So we shopped the program out. We now have a program where all our employees are covered. And you may see from the proxy, my wife and I, based on our compensation last year, we have provided our own money of $18,500 back to the healthcare program. I'm very much about purpose, right? The other thing we did from a high care standpoint is we shopped our 401k program, because we're a national program. No one was coming in and helping these employees. So we now have a local program with 100% participation rate in the 401k program. Now, why is high care important? Because when people come to work, I want them focused on a customer experience. I really want them focused on a customer experience. When their customer comes in, the eye contact, or with their customers on the phone, I want them to feel like $1 million, right? So high care is really important for me. It's a great attraction. It's a great tool to attract people and also retain people. High performance, absolutely. We need to strive to be among the top 20% of our peer group, right? It's going to take time, because when you take this bank, it was a mutual for 101 years, right? And we've just recently converted. So for me, when I think about a peer group, it's ROA, ROE, non-performing assets, assets and loans per FTE, efficiency ratio, and best places to work. And that's where I'm in the top 20% of peer group. If you look at us right now, compared to 2019 to where we are 2022, we've already hit the assets per FTE and loans per FTE. We've doubled that. We've hit the non-performing loans, and I'll go through those numbers. They've declined tremendously. I'm focused on the rest. So when it comes to high accountability, I'll tie this back to high performance. When I make decisions, I'm accountable to our employees, customers, our board, our regulators, and our community. And if I generate the right decisions for them, I'm going to generate right decisions for our shareholders. And just so you know, my interest on ROA and ROE are equally aligned with the investors. When we did a demutualization, as part of demutualization, I was able to get 100 shares, as part of the process, only 100 shares. I have subsequently bought, and I have purchased up to $737,000 of shares. So my interests, trust me, are aligned with the investors. I'm all in, right? If you look at page 7, it shows you the history of the bank. I won't go too much into it. Pages 8 through 10 shows you our executive team. Our executive team does have the runway to lead a much larger organization as well. So you'll see that their bios on pages 8 through 10. Pages 11 through 13, that shows you the issues that we inherited when we got to this bank. So given a mutual, right, and I give the board credit, because in its 101-year history, they did not go out and hire somebody. Everybody was, grown within the company. You came in as a teller, became a branch manager. 30 years later, you became the president. So I give the board credit, because they did fire the CEO. When I came here, there was no CFO. They fired the chief banking officer and chief retail officer. So in one way, it was nice. It was a clean slate, right? I came in from the outside. There were legacy and redundant systems. We're still working through 1 or 2 redundant systems. It's going to take us a little while to get through 1 or 2 just because of the contracts. There's a lack of investment in training. There wasn't any formal training in the people in what is customer experience. Why is customer experience important? Why is engaging a customer important? So there was none of those things. There was no investment in recruiting and retaining talent. Our facilities were tired. Excuse me. If you look at our branches, they were very tired. On them. So as time permits and lifts, and our goal is every 2 to 3 years, we'll go back to one branch, make sure from a appearance standpoint, it looks good, parking lots, all those kind of things. They were all neglected. If you take my office, excuse me, my office is actually in a branch. I have 2 doors that actually go into our main branch. My carpet was from 1984, and it was torn. I challenge you to find a CEO whose carpet was torn, right? It was completely torn. It didn't bother me, right? But that's not the image you want to give, right, as a commercial bank. And then also, there was no investment in technology. So next slide, slide 12, will show you the loan portfolio. It was very weak characteristics in terms of the relationship borrowers had with the bank. In January 2019, our delinquency was 7.99%. As of June 30, 2022, the delinquency stands at 0.65%. Non-accrual loans were 4.79. As of June, they stood at 1.622%. Our non-accrual to total loans was 0.55%. We've done that without charging one loan off. We have not charged a loan off. It's just been what we do is we have weekly calls Tuesday morning, 8 o'clock, happened this morning. We go through every non-accrual loan. What's the status? What's happening? Where are we with our commitment and the borrower's commitment? And we work these non-accrual loans very hard. Weekly basis. I'm on the call, chief banking officer, credit manager. Credit quality standpoint, we also have monthly partnerships are reviewed every month. We don't want any surprises. All the top 50 credits are reviewed. Every construction loan is reviewed every month to make sure, is the project on time? Is it on budget? Are there any issues? So from a credit standpoint, there was no management, there was no oversight. So we've really focused on that. And then also next slide, you'll see, the characteristics of the portfolio wasn't that great. It was 85% residential, very little commercial. So when you take the interest rate risk standpoint, it was a huge issue. When COVID hit, and it hit, as all of you know, right, April, May 2020, our portfolio was 85% residential. We had $50 million in refinances occur within a time span of 4 months. So our portfolio went down to 120 million. We had a decision to make at that time. Do we put on 2.8% 30-year residential mortgages? We said no, right? We took our time and we continued to build the commercial book. And, that's what we did. So when you look at our accomplishments, we've really shifted our business model from a residential to 90% commercial. We've revamped our credit underwriting process. And what we've done there is we've brought in a loan of the life system, Abrigo. So it goes right from the beginning, right into Laser Pro interface, spits out the documents, and it sends out the reminders, not only to our relationship managers, but also the customers in terms of financial information we require. So we've really tried to create some efficiency there. Now, we won't see all the efficiency in that process this year. I think we'll see it next year and the year after, but we're really focused on making sure we're bringing more technology. And also this helps because when the regulators come in, they can go right into our system and pull any information they want. The other advantage of this is coming right from our core. We've got one area where this information is coming. So we're doing CECL from Abrigo, and we're also doing CRE stress testing from Abrigo. So we don't have multiple spreadsheets going all over the place. We instituted new branding, new products. We had 10 retail checking accounts. We've reduced them to 3, right? Focus on customer needs and desires, not on our needs and desires. If we focus on customer, we're going to get more checking accounts. So we did a new branding, new products, new services. The bank did not have online banking or mobile banking. We've introduced those as well. So we're really focused on making sure we have the products and services that our customer needs. If you look on next page, we have a fully robust cash management system, ACH, positive pay, all those kind of things. We had a new board member. We've also built several training guides, not only to improve the bench strength, but also it helps from a standpoint of succession planning. So if someone does leave, we have all these things in place. What I will tell you is when you look at these accomplishments, we've done a lot in 2 years. It's like, I think the gentleman before said it was like a tanker in the ocean. I kind of envision it as an aircraft in the air. And what we did was to the aircraft, we changed the wiring, we changed the instrument panel. At the same time, we changed the engines, and then we flew right into a storm. right? So we've achieved a lot in the last 2.5 years. The other thing we've done is we've turned over 70% of the FTEs. None of the original relationship managers are with us. We have no other original lenders here. All new relationship managers. And what I also feel has been important for us is our credit process is much better than it was before I came here. So when you look at our performance, I'll go into when you look at us, what I would ask you is judge us on and take another mutual, which was kind of in this condition, which didn't have the commercial background, and look at what we've done in the last 2 years, or judge us on another commercial bank, similar size, and what have they accomplished in the last 10 years compared to what we've accomplished in the last 2 years. So I think we've gained a lot of traction. We've got a long way to go still. I understand that from ROA and ROE, but I think we've got all the positive moves for us. If you look at page 17, you'll see that our top 50 depositors, 90% are new to the bank. And number 50 balance is 641,000. So we've really changed the composition of the depositors here. If you look at the loan customers, 84% are new to the bank. Of the 16%, it's interesting, one of them, when I came here, had a balance of 800,000 with us and no deposits. I met with him. Now he's got $3.5 million in loans with us and $400,000 in deposits. And we get a lot of referrals from the guy. So what happened here was they had customers who they didn't ask for deposits, right? Customers came here because, they may have maxed out another bank. It wasn't really a relationship, right? The bank was providing no value to these customers. Right now, this customer will call us and say, hey, I'm looking at this project. What do you guys think? We provide cash flows and all that kind of stuff to our borrowers. We want to be their partner, and we're seeing that happen, right? So that's why the 16% that still remain here, we've expanded our relationship with them. Page 18 shows you our framework. So this is a framework I use for strategic planning with our board. So we have an associate, customer, operational, financial, and community focus. In the middle is our purpose, our vision, right? Surrounding is high care, high performance, high accountability. We use this from a strategic planning standpoint when we go to the board. And then every quarter, we report back to the board on how we're doing on all the tactics that are underneath each one. So if I take associate focus, we may have 12 or 15 tactics. We report to the board every quarter how we're doing on those tactics. Now, these tactics may change as they did in 2021 with COVID, all those kind of things. But in general, if we don't get any big swings in the external environment, 90% of these tactics stay intact, and we report to the board, okay, how are we doing on this stuff? So this really drives our strategic plan. Page 19 is our map where we compete. And really, for us, this is a branch-like model. We used to have 5 branches. We have 4. The one you see to your west in Harrisburg, that's an LPO, which we opened in February of 2021. Then we opened an LPO in E-Town. So Tom Bream, who's our market executive for Harrisburg, Tom and I have worked together for the past 20 years. Jeff Nolan in E-Town, he and I have worked together for the past 20 years. So what we like to do is hire market executives in an LPO structure, and then they build the team below them in terms of relationship managers and cash management. And we find this works out very, very well for us. So if I take the Harrisburg market, where we've had success is with the Mid-Penn and Riverview merger. Mid-Penn got distracted. We picked up a couple of clients from that, and it was amazing. The one client we picked up, he referred 5 other businesses to us. So that's really worked out well for us. The Bryn Mawr merger has helped us in the Coatesville, Westchester area, and I'll talk about that in a slide or two. And now we're really focused on the Centric merger. I think the Centric merger will give us some very good business opportunities. So going into a business model, if you take our size, when I got here, we were 200 million assets. We're just over 400 right now. Our business model is simple. And I tell people, I tell customers, we can't be everything to everyone, right? We are very selected. We do 4 or 5 things, and we do them very, very well, right? I want us focused on 4 or 5 things that leaves a memorable experience, right, to our customers, and they become our biggest fans. We're not going to do car loans. We're not going to do student loans. We're not going to do credit cards. We just can't do it, right? From a residential mortgage standpoint, we do them, but we do a 3, 5, 7-year arm, and we don't do a lot of them. For our commercial customers, We'll absolutely do one. So to give you an example, where a commercial customer bought a house for $3 million, wanted a $2 million resi mortgage. We told the customer, okay, you can blend it between 3, 5, 7-year ARM. And the customer blended it. And that's what we'll do, right? So we're very focused on the commercial client, and then we dig deep, deep, deep into their personal retail deposits. We're also very focused on the not-for-profit community as well. We feel they're great deposit institutions and that they can help us with low-cost funding. Next page, you'll see a part of our business model is we have a white glove delivery approach, and this is where I'll talk about Bryn Mawr. We had a customer I met with, was a Bryn Mawr customer. They were doing fine, and this was all cash management, no lending relationship. Bryn Mawr merger gets announced. They call us a month later and say, hey, okay, we'd like to talk seriously now. They had 138 bill pays, and I told them, you don't lift a finger, we come to you. Our cash management person went there and onboarded 138 bill pays, right? When you do something like that, the question about what you're going to pay for deposits doesn't even come into the middle here, right? We onboarded 138 bill pays. We took care of everything for them. It's a 7-figure cash management relationship. We have a CPA in the Lancaster community. He's referred a lot of business to us. His loan outstanding is quite rather large with us. He's moved his entire business relationship and his personals to us, right? He's old school. We've got mobile banking on here, retail, commercial. He doesn't like this. So what do? We went to his house and put an RDC machine, right? We installed it, we showed him how to use it. So for me, I tell our customers, we come to you, you don't come to us. If you take our deposit customers, I bet you 98% of them have not been in our branch in the last 1.5 to 2 years. They haven't. We go to them. If they need something, we go to them. Right? With the way technology is, you can service them. There's no issue why you can't. So that's our business banking model. It's very defined, right? Very streamlined. We're very focused on what we do, and we understand what we're not good at. So we leave that alone. It's not worth it, right? Page 24 shows you year-to-date numbers. I know you've probably all seen that as of June 2022. Page 25 shows you the focus areas we're focused on for remainder of this year and into next year. Obviously, we need deposits to drive our loan growth. And this might take a minute to load up here. So we need deposits to drive our loan growth. We have the cash management system up and running. Attracting talent with these mergers, I think we'll get some opportunities to attract some good talent, and we continue to improve credit quality. We're not happy with 0.55 on the non-accruals. We'll continue to drive that down. Page 26 shows you some history here. Some of you may have seen these who are investors in our shareholder letter. What's interesting is when you look at this and you look at the history of the bank from 2009 to 2019, on average, the bank grew by $2 million a year. In 2021, you can see our growth. The growth that took place in 2021, if I take the average of 10 years, 2009 to 2019, it would have taken the bank 31 years to achieve the same growth as we achieved in 2021. I know we've got to focus on profitability, ROA, ROE, and I'm going to tell the investors, we're aligned. My money's in here. There are no free grants, no free options. My money's in here. Page 31 shows our relationship with Stonebridge Financial Group. We have a very good relationship with this group. We do back and forth referrals with these folks in terms of 401k plans. We just have a customer here who has been in this community for a very long time. I think his loans are maybe a very small number in loans. His deposits are very good. Need a 401k plan. These guys put in a 401k plan with a fee arrangement with Stonebridge. So it benefits both of us. So it's been a great relationship between us and Stonebridge. They also do individual asset management as well. So these guys have been absolutely great to us. And last thing I'll leave you with is on page 33, Make-A-Wish. We're very focused on Make-A-Wish. With Make-A-Wish, we've been able to go to them and basically tell them we'd like to support children within our community. And we've done that. We made the first wish come true for a young 7-year-old girl in Chester County. So with that, I'll open up. Thank you.
That's terrific, Janet. Thank you for walking us through that. We just have a couple minutes left, but we do have a break coming up, so we might be able to extend in. I'm going to combine some questions from Fred Earl to a broader question about, you've done a lot so far. Lead us now through the path of the next 2 years to get to where you are. How much do you need to do? How much spending is going to have to be on the expense side to get your systems and so forth? Fred's question focused quite a bit on the branch structure. Do you have your branch locations where your customers are, and are you going to have to do some work in aligning the branches locations? And also he wanted to see if FRSB is a big competitor from Chesco, Chester County. So it's a lot, but kind of walk us through the next 2 years with that.
All right. And if I think about the next 2 years, and I tell everybody at work, what I want you to do is get your process better inch by inch every day. I don't want it by a mile. Inch by inch, we make our processes better, right? And we continue to do that every day. How do you make your process better today than it was yesterday? Remove the friction out of the process, right? So that thing is going to be continual for us. We're never going to reach a point where we said, okay, we're there. No, we're going to continue to make sure our process is the best it can be for the customer experience and to drive profitability. So for the next 2 years, what I see us is continue to expand in our marketplaces. We'd like to attract talent. I'll be honest with you, the cost of talent has gone high, right? So the question becomes, at what point right now we could bring a lending team on board. Question becomes, is it worth it for us right now when we've got our own growth going? We've got our own engine, right? It's on 4 cylinders. We haven't hit 6 yet, but I feel some people say we're on 6 cylinders, but I still think we can do better, right? So in the next 2 years, I believe we've done the heavy lifting. We're 70% of the way through that. We've got some big contracts we're working through from an IT core standpoint, and we're going to refine those to see what cost savings we can achieve there. So that's where I would say our time is going to be spent more on there as opposed to, rebranding products, demutualization, all those kind of things. On the branch side, I feel comfortable where we are from the branches, right? I mean, could one or two be in a different location? Absolutely. But right now, for me, I'd rather use the branch light approach to do the LPO. I take our LPO in E-Town. It's costing us, I believe, roughly $500 a month, the LPO, in terms of the real estate or leasing cost. It's inexpensive. If it doesn't work out, I can pull out $7,000 in a year, right? It's not a big deal. Will we need a branch there? I don't think we will. Maybe in Harrisburg we'll eventually need a branch. But once again, when you talk to people, customers, when's the last time you've been in a branch? We haven't. Now, Coatesville is a little different, right? Coatesville, this is inner city. 50% of our traffic is walk-up. It's a different mix here. But I think where we're focused on where the growth is, I'm not sure it's heavy branch deployment.
And David Carlson has a question. In terms of assets, is there a target of where you would like the bank to be?
There is not a target, but we certainly need more assets as, inflation has certainly impacted the operating side of it. When we think about our contracts, all those kind of things, right? So I'm not really after an asset size. I'm more after profitability. If I remain at 400 million and I'm more profitable, I'll be happy with that, as opposed to being 600 million and not being as profitable.
Good. I don't see any questions out there, and we're coming up against a break, and we really appreciate your time, Janek, and thank you for coming.
Thank you.
Thank you very much.
We'll reconvene